Hello, everybody. Welcome to the Option Pit Ticker Show. I am Mark Sebastian, your only option. And today, as we do every week, to everybody who downloads the app, you are able to attend our live analysis and breakdown of a specific stock every week. We've hit in the past on coin. We've hit on energy names. We've hit on tech names, and we've hit on IBM. I mean, there's been a whole host of names, and the track record so far of our trading has been pretty darn phenomenal. And I'm really proud of the work that we put in. Just goes to show that three heads are better than one. So what's going to happen is I'm going to break down the stock from a kind of a fundamental, a kind of holistic standpoint. Leisha is going to dig into the charts. Andrew's going to dig into the volatility. And then we're going to come together and develop a trade. All right. So this week we were talking CarMax, KMX. And you really can't talk CarMax without talking Carvana. So what you'll notice is I spent a little bit of time in my writing piece from this weekend kind of discussing the difference between their fundamentals, their cash flows, and everything. And, you know, Carvana has about an 8.35 billion valuation. KMX is worth about 11 billion. So let's say Carvana is worth about 80% of CarMax. Now let's compare the financials. CarMax had a net income of $500 million on revenue of $26 billion, positive cash flow, earnings per share of $3, a cash flow per share of it's got sitting on $4 of cash, positive cash flow, and pretty nice revenue per share as well. All said, it's got a PE of about 22. Given where we are in this market, that's actually middle of the road. The old rule used to be like 15 to 18. I feel like with where rates are and inflation are, that has moved more toward like 20 to 22 being normal. Meanwhile, Carvana had a net income of negative $242 billion on revenue of $11 billion. So they do less than half the revenue. And they lose money as opposed to making. CarMax made $750 million more than Carvana. Carvana has negative cash flow. They're sitting on less cash. And obviously, it's not going to have a PE ratio because they lose money. So when you're looking at this from kind of an investment thesis, your initial thought would be, CarMax is clearly the better company over our Carvana. Now, there is some advantages to CarMax versus Carvana, right? CarMax is very go to the lot, get the car, test drive it, and, you know, take it home, right? Whereas Carvana doesn't have the real estate issues that CarMax, right? CarMax is a lot of real estate. They are negatively impacted by interest rates, and they've got it is very traditional, and its revenue fell over the last 9 months. Net income's gone up a little bit, but it's not the growth engine that it once was. So it's a lot more boring a stock than I think Carvana is, which is why Carvana draws that interest. But Carvana, you look at where they're going. Their earnings are going to be February 22nd. I think this is kind of a make or break earnings for the firm. The assumption was they were going to kind of go out of business at one point. This thing had gotten down to about $2 in January of 2023. It's had a pretty incredible run, while its earnings really haven't delivered what we were expecting, right? This is a company that, is seeing losses fall. They actually did make money in November. That's why they got this big pop. They've seen their losses fall, but you've got to ask yourself, one, is that sustainable? Two, are they able to grow this business? And three, what is the peak that they're able to really get out of this business? And so at $43, I would say from a risk reward basis, I think that ahead of this next earnings, given their last quarter, you could say that it's a pretty relatively fair value risk reward from a valuation standpoint. CarMax, kind of different story. Let's look at these earnings here. Come on. Here we go. So their earnings have been pretty consistent. They have been managing to beat their earnings outside of a real rough stretch in 22, but they've never actually lost money. And so when I look at where this is from a valuation standpoint, and really their ability, a merger of CarMax and Carvana would actually be, I think, a really interesting idea, or a similar technology, because with the amount of inventory that CarMax is sitting on, the ability to leverage that into an online delivery portal, maybe not Carvana, but there are other firms that use similar technology that stink. Like Vroom is probably going to go out of business. Carvana should buy them should buy their assets in bankruptcy court and try and start leveraging those within their own internal base. So there is an area, I think, for Carvana to see some serious growth if they're forward thinking long term. Now, from a near term perspective, they've already had earnings. Despite having a pretty decent earnings set, it took it on the chin. It is riding the 50. That's about as deep as I'm going to delve in. But the general trend of this thing has been higher outside of kind of that weird earnings pop. We've seen in January a lot of the value names, a lot of the lesser expensive names really go nowhere. It's been a very narrow rally in January, really driven by about 5 stocks. Maybe 10 if you want to throw in AMD and some of the other chip makers in there. So I think there's an opportunity for a savvy investor to potentially jump in and ride this thing back up to $75-$80 a share as a near-term trade. My lean would be bullish, but I want to leave what direction I'm going to go to Leisha, who is going to take it away with the candles. Take it away, Leisha.
Thank you. So initially I had written up that CarMax looked like it was ready to fall out of bed. It has since held its support here. I have a shorter term uptrend line here that goes back to late October. Right now, though, CarMax is trading in what the Japanese call a box range. And that would be right here, this consolidation box range. You want to see it trade outside of that range before really deciding on which direction it's going to go further. I like to see it trade below 68 to hop into the downside. Today, it's clearing the 50-day. You will have some resistance up here at the 21 at 71.72, but I'd like to see it trade out of this range, maybe above 71, before I were to hop into calls or puts. So maybe, Andrew, you know what that means.
Yeah. So give me your range again, Leisha.
You want to see it trade out of this box range. So you want to see it go below 60. What did I have here? About 68.5.
Okay.
I like to see it bust below there. And like I said, today it's kind of trading above over the 50-day. I'd like to see it trade, over 70, 71.
Half and over 70.
And then to me, it will take a direction.
All right. Well, I wonder what that price is then. How that price is. Well, we could take a look at the vol. I think that's pretty good. I mean, it does look like it's kind of on that like a gently sloping uptrend here, after the earnings and whatever.
Your implied
Also,
vol
I'm trying to buy a used car and I'm watching the used car prices plummet.
Oh, really?
Yeah. Because our car kind of it was supposed to go to the boys and we were going to get a car anyway, but I never buy a new car just because.
See if you can do it. See if you can go to the used car dealer and collar them. Say, I'll buy it when it dips below 30,000 and I'll buy it above 35.
Well, it's funny because as we're looking, they're like, but they've come down. We're looking like for a Honda Passport. We just need something a little bigger like that. And they've dropped probably $5,000 or $6,000 in the last 4 months.
Yeah. I'm telling you, sell a risk reversal. What's your price range? Like, I'll just say 30, right? You want to pay 30?
So I'm wondering if that is better for CarMax or worse.
CarMax has an embedded. The way CarMax prices is they make more money off of cheaper vehicles than they do expensive ones.
RSI is rolling up on CarMax. What does that mean, Jose? Is
That's a relative strength index?
Right here.
That's Alicia thing.
No.
And the MACD is ready to turn positive or trying to turn positive.
So
now
I would look at this like so if I'm here, I'll show you like some. Do you guys want to see some like
what was Alicia? What were you about to say?
I was going to say we chose CarMax and because one of our pro members had just mentioned that he had a pretty good friend in the dealership business and he hasn't seen it this bad in a really long time. So I think cars are piling up, Andrew, if you want to wait a little longer before you make your purchase.
Yeah, it's kind of one of those things where we're going to just throw out some lowball bids and see what happens. Because we have another car we could drive, so it's not that big of a deal. But
like my mama told me, Andrew, you better shop around.
I have to say, we lob you some softball sometimes.
You do. All right, Andrew. So now Andrew is going to come on, and he will break down kind of the volatility complex, and then he's going to come up with a trade, and then we're going to tell him whether we like it or not, and I'll probably throw out something simple to go along with his trade idea for the more novice trader.
Car Edge says, let's see here. Okay, so here I will share my screen. Okay, so here is the last 3 months for sales will go up and tax returns go out. Yeah, well, not my tax returns. All right. So let's see here. So if we look at the last year, right? So there's a lot of like gobbly, gook here, but when you look at it, if you're looking at the 30-day vol is pretty much as low as it gets for CarMax. These little slightly longer term vols here are in a shorter range. Personally, like the fact that at least we had this and we're looking kind of like 71, 68. I would look like leaning long here. I don't think the vol is so low that I think like a 72 maybe or 73 calendar might not be a bad trade, something like that. Just because you're not really spending a ton for the vol, and there is a little upside vol here. You got a 37 vol. So when you have this kind of upward sloping vol, things are kind of inexpensive. So I would look at something like a Feb-March 15 calendar. Maybe, so Alicia's going 71. So I go 72, maybe 73. Let's see what kind of strikes we can get here. So we could sell the Feb 16 73s, and we could buy the March 15. So let's say 75. I would consider even like just like a simple diagonal. So buy the 72 and a halves for 260. I want to get something here. What can we sell the 75s for? Like 70 cents, the 72s for 145. So let's see, 140 over. So 265, that would be about $1.20 for the 72 and a half calendar. So I think that's a fairly inexpensive calendar. And if we get like a break below, what was 60, I would say like 60, I will ask Leisha. Then we just go buy, you can buy a put, probably like a 65 put. So we have to get some ranges. So I think a calendar is not a bad looking trade. Just because you're getting very, very cheap options here. I mean, they're super cheap. The 75 calendar is 60 cents over like 170. It's only like $1.10. That would line up very well. So just buying like 2 call calendars, and you could buy maybe 3 call calendars and 1 put in March if you wanted for a hedge. So it's basically what you're doing is vol is low. We've got a lot of news coming out. I don't know if I want to be 72 and a half. You'd probably be out of the calendar in a day. If we get any kind of a rally, you wouldn't make very much on it. But I think 75 gives you enough room on the upside, and you basically get some defense here on that. Let's see here if I've got, I don't think my thinker's swimming up. So basically what happens is your short call would give you enough room if the stock goes down to whatever. So the Alicia was saying like 68 and a half. So the short call would help cover your trade on the downside. And then you can decide if it picks up to buy a put, probably like a March 65 put, something like that. But I would just start with kind of a simple call calendar here, like 75 level, something like that. And then you just manage it afterward. What happens when it moves? Right? If it moves up, you don't have any problems. If it moves down to kind of that little, I wouldn't do anything in the noise in between, but if it hits 68 and a half, then you just buy a put and you just move along and see, and then you see what happens. Where does it go after that? Questions, comments, anything? So let me, I can put something up here.
Yeah, Andrew, I like your idea. I've got kind of a simple idea that I was looking at.
Okay.
Because the nice thing about the weekly options as opposed to the monthlies is you get dollar strikes.
Okay.
So like March only has the 70, 72 and a half, 75s, but the March 1st has the 70, 71, 72, 73s. So you can really tailor your trade. And I was looking at the March 1st 71 calls. They are,
hold on, let me see. March 1st. Let me hear. March 1st, 71 calls. Okay.
They are pretty darn inexpensive, is what I was looking at. They are $2 and maybe 70 cents. And, the 77 calls are probably over 70 cents. You could put on the 71, 77, so 6-point vertical for probably less than $2. That's a payout better than 2-to-1 on a little baby call spread. And if CarMax does get a little bit of a lift, you're gonna make some dollars pretty quickly. And if it breaks support, you sell out of your call spread and you pick up those puts. And just do the get back trade as our friend Vaz might say.
All right. So I'm going to whoopsie here. So you like buying the, let's say,
March
so
1st.
Like the March 01. What's your strike, Mark?
The 71.77 call spread for less than $2.
Okay, 71. 77 call spread. So that would be buying the 71, selling the 77s.
Yep.
For less than $2. And then if it breaks below 68.5, Leisha's
dump it, take a loss, and pick up the puts.
Okay. All right. So dump the call spread. So break below 68. Kill the call spread. Okay. And pick up 65 puts.
Exactly.
March 01, 65 puts. So here, because Mark's call spread's a little more, so if I'm doing 3 of these for 110, you probably need 1 of these relative. I mean, if you're trying to figure out what the dollars you want.
Yeah, you don't need to go crazy.
So there we go. I'm going to see if I can fill my calendar here. Hold on.
Let's see.
Okay. My name is CarMax. What happened to 3M? It was rallying here, and then it just stopped rallying.
Yeah, well, the whole
oh my gosh, my
kind of turning over a little bit.
Coin is going insane.
Oh wow, it's up
134. It would what is it going to go to 145?
I guess so.
I'm glad I bought my call. All right, so let's see here. I'm buying a spread. So I'm going to do my 15, okay, and then do 75. All right, I've got a 105, so I'm going to bid $1 for this spread.
Okay.
A nice.
Yeah, I think you let it come to you. This is not a chase trade.
Yeah,
you've got time.
Actually, I'm bidding $1.05. It's in the midpoint. $1.05 fills instantly. So you could probably pay $1 for that, and then I'm going to put an alert on at 68.5. If it goes below that, I will do the put thing.
There you go. Easy breezy lemon squeezy, Andrew.
Yep. Oh, Chewy's down. I got some puts.
All right. Now, everybody, if you've not set up the application, we want you on it. We want you using it. It's the fastest way to get our trade alerts. It's the fastest way to get information on what we're up to and what we're doing next.
I got to leave, everybody. Take care.
We'd love to have you on board. So I'm going to, Andrew, you want to turn off your
I do. I got to split. Sorry, guys. I got to go on to.
All right. So Andrew's going to
go. Good day.
Andrew's going to go fill Trading Desk. Trading Desk is our S&P and VIX trading service. If you're not already a member, you should reach out. It's the only service that Andrew and I are both on every day. You can call my team 888-872-3301 to join it. I want to thank you for being here. If you got questions about our services, give us a call, 888-872-3301. And folks that are members of Option Pit, make sure you've marked your calendars. July 22nd through the 24th in Chicago, the Option Pit Pro Traders Conference. This is open initially to only Option Pit members. I'm going to bring in a bunch of amazing guest speakers. Andrew, me, Leisha, Frank. I'm going to see if I can get Griff to come in, Olivia Vaz. We're all going to hang out. We're going to go, we're going to trade together. We're going to go have dinner together. We're going to go to a Cubs game together. It is the best value that you can get for a conference. We'd like to get you, we're going to do a tour of the SIBO. I may even arrange to have us ring the closing bell. So, folks, I want to thank you for give my team a call, 888-872-3301 to join us. Give us a call and or email us, support@optionpit.com. So this has been the Option Pit Ticker Show. Like and subscribe to us on YouTube so that you can get these videos as soon as they come out. And if you have questions or you want us to review stock, make sure to leave it in the comments, and we'll take a hard look. All right, everybody. I'm Mark Sebastian. Have a good one.